Well, hello folks, I'm Ellie Little and this is your daily NeoTA wrap. When we take a look at these markets in, we do it from a neoclassical perspective. Every time we ask ourselves what happened today, and given what happened, what does it tell us about tomorrow? You know, I do this show 4 times a week, every Monday through Thursday. I broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel Ellie Little. You can catch it there. We had a difficult market again today. This is the third day straight day of selling. I want to pop over here to this chart, and I want to bring it up on I'll just bring it up on 5 days, and we can put it on something more like, say, 15 minutes or something. But what we have here, get this out of the way, what we have here is you can see, and this is on the strongest of the indexes, right? This is not the weakest. On the strongest of the indexes, right, straight down selling. A couple small bounce attempts today actually tried to go sideways, but for the most part, straight down. Now, if you go look at something that's weak, and let's take the weakest one, and then we'll come back to the S&P. The weakest one has been the Russell. That hasn't even tried to lift. That's just straight down, day after day after day, 3 days straight, right? Gap up on Friday, straight down since then. And then if you take and look at S&P, which is kind of in between, one decent bounce attempt, then a gap down, straight down. And today, as you can see today, it opened here, gap down, tried to rally, straight down the rest of the day. Never could do anything, and then sold off at the end of the day. That's not a healthy market. That's not the sort of market you'd expect to see, when it's been a bull market for this long. Let's look at the ending numbers here. Composite, actually just red across the board, right? The composite 40.42, the S&P 0.58, Russell down almost 1% again. That's 3 days running down 1% or more. NDX only 0.24. Apple, the real strength, but you had the IBB, the SOX, both of those holding up as well. Gold was up 0.5%. Commodities basically bouncing for the most part, as well as bonds again, and the dollar pretty much flat. So weakness in equities, bounces where it's been, this has been strong, these have been weak. These are a little bit stronger, these are weak. These are bouncing, these are correcting. Will it flip around? Probably. It's the way it usually works. But, we're starting to get some damage now. So let's pop over to the charts on the daily here and look at the kind of damage that we're getting. Now, we had PMI numbers out. That was really the primary numbers this week, is what those PMIs were going to look like. China actually was a little bit better than they expected. Europe, it wasn't actually worse, but a little bit worse. In most cases about the same as expected, weak. In the United States, the U.S. markets came in pretty strong too. Problem is these markets couldn't lift off of it, and they should have. Here's that retest regen, right? You came off this high, that was the break, immediately doing a retest regen. On an immediate retest regen, odds are about 50-50. They're not that high. This one doesn't hold, volume does expand, gets under the Fed bar here, also under the swing point highs, the one that we broke. That's the retest regenerate zone. That tells you buyers unwilling to buy, right, and sellers still willing to sell at lower and lower prices. That pretty much tells me this is turned back into a range trade at best, and maybe it's something worse. But we've got a range trade going on now. The damage now is done. Yeah, can it bounce from here? Sure it can. Will it bounce? I don't know. That target is what really down here. It's off this bar is the target now. So can we get a little bounce off of here given the fast, heavy selling? Sure, we can get a little bounce, set up an ABCD structure to get down there. But that is the S&P. That's what it looks like. Not looking too good. Let's flip over and look at, so that's probably the biggest tell. Let's move over and look at the Russell now. The Russell actually today really needed to hold this bar's high. It really needed to hold that area. let me get the right pencil, right? The high of that low. You never want to see it give the high of the low up, because once it does, it gets into this bar, and this one's into it now. And once it does that, it tries to get to the bottom. Well, the bottom of this time frame is going to be a break on, the weekly chart. So if I pull the weekly chart over here, you can see that bottom down there is these lows, and notice all the other lows that are down there, folks. This is where it's getting into danger territory. If these start to break, and this has been the one that's been doing the topping pattern, and let's look at that a little bit closer, and I'll flip it up here. This is a topping pattern. You have a situation where you go up, you make some highs, right? You come back up, you test them, and then you can't get back up to them. So now you're setting up ABCD structures to the downside, and you have all your lows down there together. If you start cracking these lows, folks, this thing is going to make a run. It's going to make a run to the downside. So that's the danger in the weakest index continuing, time after time, continuing to show relative weakness, the inability to lift. And here we are coming down, starting to look more and more like an ABCD down. If that is true, that's going to break these lows. I'm pretty sure it was 120. Let me see, 1213. That low was 11. So it's roughly 100 points, 106 points. Take that off. There's 1080, about 1076. That low is 1082. This one's 1082. That's ugly. It's going to break them if it actually spirals down there. Now, the hard part here is you should get a bounce. And what you're going to hear me say on a summary is that these markets probably will try to bounce tomorrow, just like I thought they would probably try to bounce today. They're just more oversold now. The only one that's truly oversold is this Russell. And if you look back on the daily here, you can see what I mean. I mean, this thing just dropped 5%. 1160, 50, yeah, not quite, about 4%, right, in 3 days. And that's after dropping, 4% or a little bit less the prior week and a half. So you can see the kind of damage this has done, how it's become stretched. I do expect this will find a bounce somewhere here, but this is ugly, and this is not a good thing. And the fact that the weakest one can't lift, argues that the others are going to continue to fall. So we probably get a bounce, and then we probably get some more downside, and that's because you see damage now, range trades on the S&P. You see range trades, not just there, but if we go elsewhere. NDX is still holding, it's the only one holding, still holding the Fed low. But if you look over at the broader NASDAQ's already given up that Fed low yesterday and is starting to go after its lows and coming back to do a retest regen off these prior highs. Dow Jones, same sort of thing, back into the retest regen off this high. So if it can't hold this, it will be one more nail in the coffin, so to speak, with respect to the bullish trends that were in effect. But what you're going to see next is going to add more fuel to that fire that I was just stoking, and that is, if we go over to the sectors real quick, I want to just quickly point out a few of them. Here's the SOX. This one's a range trade, and I'm going to show you on each one of these real quick. Swing point high, can't hold, right? That one has already turned into a range trade. You have some others starting to turn into range trades today. Here's that swing point high, breaks it yesterday, that's a range trade now. How about the XLF? That was one of the strongest ones. Breaks under that swing point high today on heavier volume. That's a range trade. XLI. Let me get the XLI. Hang on. Here's the XLI, same thing. Range trade breaks. And not only that, on some of these now, we've got about 3 of them tonight, they're breaking swing point lows as well. They're going to transition trend tomorrow as well. So you've got multiple sectors moving into range trades and starting to break down and joining the XLE in Never Never Land on the bearish side. So in a word, Yes, we can bounce. No, I don't think it's going to matter. You're just going to get a bounce out of it is it. And then we're probably going to see more pressure because we're starting to see some real damage done to the downside. So that's your wrap. Let's move over. Let's move over to the world markets, because in the world markets we're really starting to see quite a bit of damage as well. And we had noted some of these before, and I want to pull the weekly charts up. So let me just let me switch these, and I'm going to pull the weeklies up. And the reason for this is we're starting to see technical damage that's deeper. And what I'm talking about is, you know, this market has been so bullish for so long, you know, that I think most people are scratching their heads as to why it hasn't bounced yet, even after just 3 days. Even overseas, it's been fairly bullish for so long. This is the Aussies, the all ordinary, 2 swing point lows lined up together. We've already broken swing point lows on the dailies. We're trying to break them on the weeklies. It is a hammer reversal so far. If that holds, of course, that can get the bounce and it's going to hold these. But at this point, right, this has been a second attempt on a retest regenerate off the prior high. So far it's holding it, but you got those 2 swing points right up underneath. If this does crack, roll back over and close down here somewhere, that's a major breakdown in a major index. And it will probably carry if that happens. Let's take another look at it. Let's take a look at another one. Here's the Bovespa. This is you know, the Brazilian index. Now its swing point low is quite a bit lower. It had done a breakout here and an immediate retest regen off of it and regenerated higher. Now you're starting to see it come back and do a secondary test on that retest regen. Those retest regens, the first time back, you know, it's about a 50-50 chance. When it gets back over it and does regenerate higher and then comes back again, you got about a 50-50 chance again. In other words, it may or may not hold. Again, this isn't 6 bars. It is coming back into it. It can come all the way to the bottom. If it does, what's there? Swing point low. So you can see the kind of damage that can be done over time if these start to break down. Some of them in worse shape than others. Some of them just starting to show that. If we go to the stronger ones, like, you know, the CACs that got their great big bounce, you know, off those lows, looks like they're going to give it all up, you know, and just like everything else, central bankers come to the rescue. They start talking about more money they're going to give out, and you get V-shaped reversals. But even the V-shaped reversal here now is reversing back down. That is an ABCD structure. Well, that's not quite true because you actually had a lift here. So it is not an ABCD structure. Let me take that off. It is just a rollover. What's it going to do? Come back to support. Got support in this green area down here. That's actually the low of this bar and these two over here. So you know, this one doesn't look as bad. CACs, DAX, those don't look as bad. Europe, they got a pretty nice bounce. But continuing on with Asia, you know, we've known that the 8 shares, the Chinese shares have been struggling. The Chinese shares almost got to their highs of last year. Didn't quite, or wasn't quite able to stay there. Now, takeaway bar, down, down, back into a swing point high. This is doing a retest, regenerates, coming into a nice big bar. So they should find some support here. One of the things about Neo is that you're asking, where should things happen? Right here, you should see this get bought. This little range from here to here really should get bought. If this doesn't get bought, this is coming all the way back, right? It's going to come into here first and try to get all the way down to here next. So you can line up the supply and demand, and if the demand doesn't show up where it's supposed to, that tells you things have changed, right? That's what you're always trying to figure out, is has things changed or not? That's the way you try to read this thing. That's what this one's saying. If it gets up underneath the lows of the July 21st weekly bar, this thing's gonna work even lower, and it's gonna be a huge range trade again. Hong Kong, it's just as bad, right? It's coming back into a swing point high over here. It's after 6 bars. Probability should be very high this thing gets bought, something like 82% or so. So as it comes into it, usually it just gets into the top, but you can already see it's into the middle of it. When you get deep into a bar, what happens? You usually try to get to the other side of it. This one looks like it's going to try to get to the other side. And folks, if the buyers don't show up there or off this bar, right, which is both about the same price points, let's get a reading on it. That low is, what is that, 23,372. If it doesn't find support there, what is that doing? The higher range is being given up, this range, and you're coming back into the lower one. So this setup is set up right here. If it doesn't hold, you're into the lower range. And that plays out over and over in these charts. I mean, if I go look at, let's take one more in Asia, and we'll take Taipei, which is the Taiwan market. Here we are on Taiwan, huge bullish run, right? This thing makes a huge run to the top side, gets a big volume spurt at the highs, then goes over it, back under it, less volume. That was the high. So now what are you doing? Well, you go back up, you try to get to the highs again, even after coming off with volume, right? And you can't. You fell, you come back down. What's it doing now? It's coming back after the swing point low right here. That low, if it doesn't hold, throws it into a whole different range again. 90.14 is the number. It's coming after it. It's going to test it. Whether it's going to break it or not will be the key. If it does, what does that do? It throws this whole thing into another range. So rather than being in this higher range, you go right back down to the next one, and you're into the next range, right? If that one doesn't hold, what do? You go down to the next one, right? It's all a question of whether the buyers will or will not show up at places they should. If they don't show up here, they're not going to. And if they break here, it's going to break faster. Why is that? Because it breaks on multiple time frames. When you start breaking on weeklies, which are the intermediate term time frame on your indexes, that's systemic problem. That can be that could be a major turning point. It doesn't have to be, but it can be a major turning point. And that's always something you have to have your ear to the ground, you have to be looking for, especially after we've had these kinds of runs. I mean, these are not small runs. Here's the long run view, right? 2012, this made a low. Actually, earlier 2012 made a low. Then tested into it, hammer reversal, right? Just like it was a hammer here off the low. Hammer reversal leads to a huge, long, steady trek to the north. It's what is that? June. That's 1, 2. It's over 2 years now, and that's in Taiwan. I mean, we're not even talking about, we're talking about Taiwan. And yeah, I mean, there's nothing wrong with Taiwan, but we're just saying, hey, that's a long, steady uptrend all the way up. Nice big channel. Now, a lot of folks are going to look at that channel, and I will too, when it gets to the bottom of it, but not because it's a channel. Why? Because that's the breakdown bar. That was the big breakdown bar from before. If Taipei gets underneath into this bar, it's going to try to get to the bottom. It's just the way it works, right? If you can't find buying support in the area that it's supposed to, buyers are going to dry up and they're going to wait. They're not going to put big money out there again until there's a good probability of them winning again. That's what, on a big stretch like this, that's what can set up large retraces to take place. All right, let's turn to a couple of questions that were emailed in, and let's address those at the end of the show here. So let's pop over to, what was the question here? Bear with me, let me find it. Okay, so the VIX and the VXX. So let me pull this over. Let's get the daily back up. And let's take a look at these guys. So the VIX, actually let's start with the VXX because there I have volumes. I can't really measure this one because there's just no volumes. So even though we have it charted, there's no volumes. You can't put any value on these things. These anchored support and resistance zones really are just going off price, which makes them a lot weaker in terms of value. Now here we can actually put some anchor zone resistance because we have some price and some volume. So here's the VIX. It's the futures. It's an ETN, fairly heavily traded. You can see 26 million. I mean, this is not small. It's doing a lot of volume. So anytime the market gets weak, this tends to spike, and that's what it's doing now. Volume expanding as you spike. That high it's going after, and it's not a swing point high yet. It may not get to be one if it gets over it, of course. 29.69 is the high. It's doing 38 million on a daily basis there. You're coming into it with 40 million, and you can't quite got to the high yet. Okay, sorry, I'm just trying to look this over to decide what it is. So it looks to me like this is going to get back up here to this highs. And the reason I say that is you really have two ranges. You have a range here and a range there, and it's already into the higher range. Right? It's tested into the higher range. If it holds there, I think tomorrow you may get a little pullback, but if it holds there, right, then it's going to try to shoot to this top part. And what's there? Swing point high, this one unbroken. That is the second of the larger of the two ranges, right? So this is going to be the key test point, and I suspect it will test it, and you're about halfway there. So I didn't get a reading here on what you're doing, but I assume you're trying to buy this or wanting to buy this. I would try to get any kind of pullback to buy. Any kind of pullback probably gives you a buy. Let me pop up the intraday one so we can see what it looks like here. Okay, so let me pull it back about 20 days. Pull it in. Yeah, I think you're probably the low of that bar today. So somewhere between 28.50 and I would just use this bar here. There's the bar. So use that bar as kind of the bar to try to get in on. So any from 28.50 up to about 28.90 is the price points. And then stop wise, you're just going to have to you have to grin and bear it down to about 27 and 27.30 or so. Unless you're going to put a tight stop, and this is probably problematic to do that because you can get a decent bounce that kills this. So that's the VIX. The other one actually was asking another question about GDX, which was asked last night. Oh, in the VIX there was actually a different question, so let me go back. Question was, are these hammers? Yeah, these are hammers, but typically what you're looking for is you're looking for that hammer, as far as a signal, you're looking for that hammer, this, to occur as you go, like say, underneath this low and then back over it. Right? That's where you want to see the hammer as a signal. So if this bar, for example, had started down here, it started down here and ended up with a little hammer top up here, that would be a hammer on lighter volume versus heavier volume. That gives you a nice reversal signal. And we just saw that in Taipei that we were looking at, the Taipei market. Okay, so let's pop over to the last question, is GDX. Question here was, there was a question last night about a gentleman bought it at 23, was wondering what to do with it, if it was a good buy or not. My thought was that you probably would get a bounce. This is a bounce. Again, I just can't see this getting passed by about this resistance zone that you see up here. So if you're playing this, what you want to try to do is you want to try to catch it intraday. You can't play this on a daily chart right now. So if you go intraday, and you look at it intraday and pull this in so you can see it. Let's get all these off of here. You know, like so today, for example, your big bar volume is right here. So if I'm looking at this, what I'm trying to do is I'm trying to say, hey, if it can get over this, and you see how it came right to it, and that's where they sold it. If you can get over this, what's going to stop it next? Well, you really don't have anything until you get up to here, around 23.40, right? That's a big move. Where would you like to buy it? Well, if I look at the volumes and I look at the way these are set up, right, this area here to right there is the ideal place. You know, will you get the ideal? Well, you don't always get the ideal. You got it this morning, it came right in there, and that was where it was. But if you don't get the ideal, you try to get as close as possible to the ideal, right? So you buy a little bit there, you buy a little bit more here, and your stops go real tight up underneath here. Folks, if this gets up underneath it, it can drop another 4, 5, 10%. So you have to put your stops in. You just have to have them in. So your stops have to be up and under there tight. If you get the trade, it makes the money, it makes its run up here, you take your money, you feel good, you think you did it right. But that's the way you have to trade this thing. You can't trade it off the daily right now because there's nothing there. There's just nothing to trade off of. You're going to have to find it, pick it in intraday, and make your trade off of that. Folks, thanks for joining me. I appreciate it. Tell a friend, tell two. I'm LA. I'm here to help you. Take care of yourself. Have a great night, and I'll see you next time.